many crypto operators, particularly lending platforms, have never operated it with such volatility before. So they were in the slow growth from Bitcoin, almost a decade ago, from $800 all the way to $60,000. And all along the way, some of them became really aggressive in using leverage, which is the traditional hedge fund model. Now, what happens, and this happens in equities, it happens in bonds, it happens in real estate, it happens in crypto. Crypto is the Johnny-come-lately new asset class with a whole lot of newbies in it. You're going to see a whole series of these actors get crushed to zero over the next few months.
While many economists believe that the current crypto crash is a positive sign, Kevin OLeary has a rather different opinion. For him, this crash is worse than expected, and there are a few things people need to know before they invest. To find out, make sure you hit the subscribe button and give this video a thumbs up while you're at it. Now let's dive in. Kevin OLeary is a Canadian businessman, but he's mostly known for his television presence and for the fact that he serves politics. He's also very straightforward and vocal about his views on the current financial markets and economic scenarios. In one of his recent interviews a week ago, he talked about Bitcoin and cryptocurrencies and, of course, the market crash. Initially, he talked about the leveraged companies and how most companies have been picking loans for investments for years. What's new in the market is lending companies giving out loans to coin-based companies in an extremely volatile scenario. These companies are being forced to lay off staff and cut off expenses in order to meet the high interest rates that these lending platforms demand. So eventually, with the coin crashing and the leverage, these coin-based companies are bound to go bankrupt. Kevin thinks that's a good thing for the overall market because it would end up being a lesson for everyone. For him, crypto isn't a reliable source of income and certainly not a currency that people should take heavy leverages for. He said it's like taking a big spatula from the sky and scrapping all the crap out. All the companies that would get reduced to zero just because crypto crashed terribly would be good for the market, is what Kevin believes. And he believes that this calamity would come by very soon, maybe in the next 3 months. While this might sound rude and unreasonable to the investors, it might actually work out in the long run once the excited investors leave the market and only calculated ones surf in. He also added that when you have an investment without leverage, you don't have to worry about going bankrupt overnight. So maybe in the morning it's down by a huge percentage, but you know that you don't owe that money to someone, it's yours even if it's gone. It wouldn't matter as much as a leveraged amount. That would just throw you on the ground and you would have to announce bankruptcy. Kevin was then asked if he thinks it's a good choice to invest in stablecoins, like the Bitcoin, which is experiencing volatility, but is still more credible than other coins or assets at this point. He has said this before and he's at it again. He believes that having policy on stablecoins is going to provide a powerful and efficient payment system, so eventually the coin would be backed by the dollar and would be a worldwide default currency. This would in turn make the dollar stand out in the international market, and its value would skyrocket considering that Bitcoin is spread across the world and not just America. To answer the question of why it would be the US dollar, well, Kevin is right about most or some important commodities being denoted by the US dollar in the international market, like oil. He thinks that the current scenario is very inefficient, meaning that the dollar is first taken from the States to, let's say, Geneva, and there it is converted to the local currency and then used for purchase in the market, and so all of that is expensive and just too much work. If the coin would internationally be in dollars, all the hassle would be saved and it would just be very efficient. He wants crypto coins to have the algorithm of the money market firm, which would make the particular coin have a lot of credibility, transparency, and a lot less volatility. He also added that what happened to Luna is an example of what not to do. It may be a sad example of the market, but it is a great lesson for everyone to be aware and to learn. He said that algorithmic-based stablecoins won't happen again because now the world is aware of the disaster that it is. He also talked about the USDC, which apparently is the leader at the moment, but has only progressed by 50 base points in 12 months. He added that even though USDC has not broken $1 yet, it is not a great place to park the crash.
And we think we can get bipartisan support between both parties supporting the American dollar as a default currency for a global payment system. It's not going to be the Chinese yuan, it's not going to be the Swiss franc, it's not going to be the euro, it's not going to be the British pound. And the reason it would fall and default to the US dollar would be that is the currency used to denominate most commodities. And so the challenge you have right now, and why there's so much pressure to solve this, is it's very inefficient to transfer US dollars over to Geneva, then put it into Swiss francs, and then buy Swiss Nestle stock or whatever it is you want to do over there. It's really slow, very inefficient, very costly, not transparent, and not easy to audit. And so all of that problem goes away with a stablecoin.
Upon being asked about his views on the next drop, or if the coin would go as low as 10 or 13K, Kevin commented that it is impossible to say anything, and that it can't be said where the bottom is. But he does believe that we haven't yet seen the bottom. In simple words, the coin would go down. He quotes from his life experiences that all the investments he has ever made, be it traditional bonds or equities or real estate, bottoms are always met with an event, or specifically a panic event. His stance is that no such event has come upon the crypto market yet, and that no company or big guy has gone to zero yet. He said it's hard to say who it would be, but the reason for this downfall would certainly be leverage. It is easy to narrow down the list by seeing all the companies taking hefty leverages for crypto investments. I like a big panic event. That's always been a great way to bottom. It's towel throwing, it's capitulation, it's massive volume. It's total panic in the streets, and it's always a great buying opportunity, Kevin said. Kevin was also asked about his opinion on what would happen to people like Sam Bankman-Fried, and if they lose money and that mass panic event takes place, would retail investors want to pursue crypto? Kevin constructively added that Sam is one of the smart people in the industry who has been a trader before the crypto scenario, and so he understands the power of leverage. Kevin has faith in Sam and says that he would be the last person to face a blowup because he would not let himself get caught in over-levered positions. He thinks what Sam is doing is a long-term strategic move and that he is in safe waters. For Kevin, the only big issue in the crypto market is the leverage. He stands strongly against companies and individuals who have been taking out loans on high interest rates, and he is almost always mockingly saying that these companies are bound to collapse, only to be a lesson for others in the market. For his final thoughts on the crypto market, Kevin was asked about the future of crypto and if he thinks it has any future at all at this point. Surprisingly enough, Kevin said that he sees a very bright future for the crypto market. He said that within a short time period of a decade, crypto might be the 12th sector in the S&P. He believes it is because of the high productivity and transparency. Even Cathie Wood had positive views about crypto in terms of transparency, so we know for a fact that it is going to last and prosper. Kevin also thinks that crypto is a great way to solve financial service problems, like the transfer of capital and funds, which otherwise costs a lot. It's just too good and too efficient, Kevin added. He just believes strongly in the idea of a policy backing the coins, and he thinks it would first happen to the stablecoins. We can all make a calculated guess over Bitcoin and Ethereum, considering they are the two most popular ones these days and are more widely known and used. While it is possible that other coins might get reduced to zero, it is unlikely for Bitcoin to go through that ill fate. His last words were, "I don't leverage money. That's the secret sauce." To sum it up, if you're an independent investor, this crypto dip might be a great time to invest because almost every economist out there has been excited about it, and because as a normal investor, you wouldn't go all out and be a big guy overnight. It is natural that you're not in Kevin's list of people who would be reduced to zero. So in terms of Kevin, if you're not heavily or slightly leveraged and are investing your profits, and that too not a lot, you are good to go. This dip might actually be the right time to invest in the coin. Well, that's it for today's video. Do you agree with Kevin saying that a company going bankrupt in the crypto world is a good thing for the market overall? Let us know in the comments below, and make sure you like, subscribe, and share this video. Thanks for watching, and we'll catch you in the next one.